Hi, this is Brian Linchey with your weekly market update. July brought some encouraging inflation news, with both consumer and wholesale prices coming in at or below forecasts. Consumer prices rose just 0.1% for the month, while annual inflation slowed to 3.4%. Core inflation, which excludes food and energy, also fell to 2.5% year over year, its lowest rate in more than 5 years. Wholesale prices were also more subdued than expected. Why does this matter? The Federal Reserve closely watches inflation when making decisions about interest rates. Some Fed officials who favored a July rate hike pointed to elevated inflation and a strengthening labor market. Since then, the July jobs report showed job losses and other signs of weakness, while the latest inflation data came in cooler than expected. The Fed will continue watching inflation and employment as it considers future policy decisions. In housing, existing home sales declined for the second month in a row, but home prices continued to show seasonal strength. According to Cotality's latest Home Price Insights report, prices rose 0.3% from May to June and 1.2% from a year ago. Prices have also risen 1.7% over the past 4 months. If that pace continued for a full year, it would equal about 5.1% annual appreciation. For example, a $500,000 home appreciating 5% would gain about $25,000 in value, highlighting the long-term benefits of home ownership. Looking at the broader economy, retail sales fell 0.6% in July, coming in below expectations. New unemployment claims remain relatively low at 209,000, while continuing claims stayed elevated at 1.78 million. If you're thinking about buying a home, refinancing, or simply have questions about today's market, I'm always here to help.